Hello traders, Gary Wagner here just before 11 o'clock in Honolulu, 5 o'clock in New York on Thursday, the 10th day of July 2014, and this is the daily report for gold and silver, and we do have moderate to sharply higher pricing in the precious metals markets across the board except for palladium. Palladium, of course, making a play and going to a record high earlier this week. First to gold, off of the highs. Highs today are at 1346.20. We'll talk about that in a couple of charts down the road. Low today 1326.40, so we've had quite a range. Currently right in the middle of that at 1335.52. Not to be outdone, silver is absolutely the percentage gainer at this point, up 1.45% higher or 31 cents. 21.37 approximately is our current print on the screen. The low 21.01, the high 21.67. More on silver towards the end of the show. Dramatic rise in gold and silver today. Most importantly, on a technical basis, as I look at it, is the fact that we have broken above our ceiling. Our ceiling that we were looking at was roughly at 1333, markets trading roughly 1335, 1334. To me, I would absolutely think that it's pretty critical that we close above that, or at least move above that and stay above that on a closing basis over the next couple of days as we go into the close of the week. As we look at this market, we talked about the fact yesterday that we had gone back into this really narrowly defined range, 1311 on the low, 1331 or so on the high, and I talked about the fact that very similar to a compression triangle, we were going to probably see this market break hard one way or the other. We actually mentioned this yesterday, and in fact it did break, and it broke the right way in terms of the way we're playing it, because of course we're long this market. We had a dramatic rise. Now this rise took us up about $16 higher on the day. It has backed off just a little bit, whether it's profit taking or the market kind of settling. The fact is that we have broken above this. We talked about the fact that we had some resistance at around 1342. We'll bring up that chart to show you technically where that came in. But my sense is right now that we are absolutely in our secondary phase of the market in terms of any kind of a minor count. You've got a wave 1 here, a wave 2 here, you had a wave 3 here. We'll take that up to the top. We had our correction here. This would be our wave 4. And we are now, I believe, all the way into our final wave, wave 5, in terms of an impulse wave count. So traders, I've gone ahead and pulled up a daily chart. On this daily chart, I have a couple of different fib retracements in here, and those retracements are really our guideposts, our signs that we look at to determine different levels of support and resistance. We talked about over the last week or so the fact that we had really good support here, and that any kind of break in there to me would signal something fairly severe. We were actually able to hold on to this level and hold on to it quite eloquently. As this market has been driving higher, there were a couple of levels, and the main level that we were looking at was really 31 to 33, depending on the fib retracement that we looked at here. It's 32.84, call it 33. The market is obviously trading above there. Yesterday, we talked about the fact that our next level of resistance is going to come in at around 1342. You can see that right in here, 1342. Of course, it's a 23% retracement, and it's a retracement from this larger move here. So it's really our last retracement line in that one, and then we have one more at 1355. So in terms of our current levels of resistance, our level of resistance is still at 42 because we were not able to make it above there, or close above there, I should say, on a closing basis. But you can see that we certainly went into that area, and then I believe we have some minor resistance again at about 1355. But as I spoke about yesterday, really this is the area I'm looking in terms of a goal to take out, or at least to be able to trade to on this particular impulse wave up. And that is roughly to match this last high that came in during the large rally starting 2013, concluding beginning of 2014, in which we saw this market genuinely move just shy of 1400 to 1391. Now, we're sitting at 1335, so we've got a considerable distance to really overtake to get there, but I really don't see that as a big issue on a fundamental basis. Rather than any of the fundamental news that has been really supportive of gold or moving the price of gold up, we keep adding to that pile as opposed to resolving any of the issues that are out there. So whether it's Syria, whether it's what's happening in Iraq and Syria, I should say, with ISIS, now we have Israel in the mix. So the Middle East is absolutely heating up, and it's heating up more than it has in the past because we have all of these issues kind of coalescing at one particular time. That's bringing a lot of geopolitical uncertainty. Comments made by the Fed were construed as bullish for gold, and that also was a supportive factor. So you combine all of those together, of course, and you get that culmination, or that what I like to call the perfect storm, in which you have different scenarios playing together, really being supportive of the precious metals markets. And in this case, gold and silver have moved up quite a bit off of this fundamental data. So traders have gone ahead and pulled up a daily chart. This daily chart is in Japanese average format, and you can see that over the last couple of days, we have gone back to green. Now, yesterday's, as we talked about yesterday, was very, very small and dynamic. That was following this very small pivotal red doji candle. So we had this very, very small retracement right in here, and then pivotal, and now we've got the market moving back up. Of course, we're well off of the highs. That's why you've got this long tail here, but it hasn't traded below the midpoint of the prior day. That's why the absence of any kind of a wick right there. And you can really see how we've had this genuine turnaround. Again, this is a daily chart, but I've blown up the candles a little bit so you could really see this pivotal center doji. Yesterday's trading activity, small-bodied still, tails and wicks on both sides. Today, the absence of that and well off of the highs. That's why we have that big wick. Now, here's the other thing that we're looking at. And of course, we have talked about this time and time again, and that is really the way that this market has traded, in which we've seen the market move up, nice spurt to the upside, then we get sideways trading. Price hike, sideways trading. Price hike, sideways trading. Price hike, but then we had this dramatic, really sideways trading activity over the last couple of weeks, and now we've had that dramatic spike again. So we've seen this market genuinely move in such a manner in which we have a period of consolidation. When that period of consolidation is over, we know that it's over, and the reason we know that it's over is we get a dramatic price spike to the upside. And lastly, silver. We talked about the fact that silver, like gold, would really need to move above what I call the muck sometimes, or the mire, but that's that sideways trading activity. We've definitely done that. I'm pegging our current resistance in silver really quite far above this, roughly at about 2180 to 2150. We talked about 2150 yesterday because that is where these bodies conclude. I'm going to the highs today only because we've traded into this area. Once we're in this area, we're obviously trading below this 2150, but my sense is if we see gold begin to move through 42 and move through 55, those are resistance areas. These are the corresponding numbers in silver that we should see silver move to if gold moves through those next two ranges. We are going to be looking to trail up our stops. It's about time to do that. We've got some sizable profits in both positions. Also, for those that pulled profits in gold at 30, it's trading roughly 35. It's only $5 difference. My recommendation is to go in and re-enter from the long side. You can wait for a dip. My suggestion is to layer that in, meaning that if you're going to take on a total of four contracts, you put 2 on now, 1 and 1 in terms of layering it in. But I do recommend that you get back on the long side. We're not really seeing any kind of corrective action. You were able to sustain and pull profits out. Traders that have been sitting on this particular position and weathering these lows that came in here, both in silver and the lows that came in gold, we were able to really avoid any kind of stop being hit, and we're now showing some sizable profits. It's been a good day and a good week for trading, and that's why I always say this has been Gary Wagner wishing you, as always, good trading. We certainly got that again this week. We'll talk to you on Friday for the weekly wrap-up and review. Bye-bye.